right, hope everybody enjoyed their lunch. Ladies and gentlemen, please join me in welcoming our webcast viewers. My name is Carrie Kirkman, and I'm a director of the Canadian Club of Toronto and your host today. Viewers, thank you for joining us. Whether you join us online or in person, we're proud of the club's track record of offering a forum for business, political, and cultural leaders to share their expertise with us. Our club offers a diversity of topics and speakers who address current trends and topics. Today's panel of experts is a great example. We're very pleased to be partnering with the Growth Op to bring you today's panel. Our events would not be possible without the generous support of our sponsors. Allow me to acknowledge today's event sponsors. They are Cannabis Compliance, Inc., represented by Karina Lakashoki, and National, represented by Rick Murray. Thank you very much. It's time now to introduce our panel. Bill C-45, the Cannabis Act, came into force last October. The bill legalizes and strictly regulates the use of cannabis in Canada. With its legislation comes a host of challenges and opportunities. There are supply and demand issues, delivery concerns, new products coming online in fall 2019, innovative retail considerations, and stock market jitters. Let's have our panelists weigh in on what's next. With us today are Matt Bottomley. Matt Bottomley has been with Canaccord Genuity since 2015. An equity research analyst, he currently focuses on the Canadian and international cannabis industry. Next is Eric Foster, a partner at Dentons. Eric is the head of Dentons' Canadian cannabis practice and is recognized as one of Canada's leading cannabis lawyers. Eric routinely acts as counsel to both public and private issuers and security dealers. Robin Rabinovich. Robin has a deep experience in the cannabis industry. This includes business development, product procurement, and compliance within the Cannabis Act. She evaluates business development opportunities in Canada and around the world. Brian Wagner. Since 2014, Brian has been very active in the cannabis compliance services industry. His agency was one of the first to focus on cannabis compliance. Incorporated 2 years ago, he has successfully grown the agency, which enjoys an international reputation. And moderating the panel is Andrea Mandel-Campbell. Andrea is SVP, National Capital Markets. She previously served as Senior Vice President with New York-based global CEO advisory firm Teneo. She is also the author of the bestseller, Why Mexicans Don't Drink Molson. Andrea and panelists, the Canadian Club of Toronto's podium is yours.
Thank you very much, and thank you so much for joining us. We really do hope we'll be able to share some interesting insights with you, and we've chosen this panel specifically to give a good cross-section of people's expertise from different vantage points. When I did this last year, we had only LPs, and given some of the news we've seen recently, we thought better to bring a more balanced perspective and try and get through the hype, which I think is going to be very important in 2019 and the years to come. I think we should start off with the news and what's happening these days. We know that Namaste recently announced that it's firing its CEO over concerns around breach of fiduciary duty and around concerns of self-dealing. We've seen a similar story with Aphria as well, and I guess a lot of people are wondering if this is the tip of the iceberg, and if we can expect more of this to come. And importantly, what should the public be looking at, and retail investors in particular, in terms of what you have to value and what you should be looking at when you're making decisions around putting money behind some of these companies? So Matt, maybe I'll start with you.
Yeah, well, thanks for having me. One of the things that I always like to look at when I take a step back when you're trying to value any company is, at the end of the day, I like to always say in these client meetings, with cannabis, it's not necessarily like a Bitcoin or a cryptocurrency or some of these other speculative things. At the end of the day, you can roll it up and you can smoke it. And there's a fundamental EBITDA EBITDA that comes out of that, or cash flow, if you're able to sell your product and get distribution and be able to maintain your pricing. So, my view at the end of the day is brands are likely going to win this space. And the things I look at the Canadian licensed producers is who has purchase orders in the various provinces, who are the ones that are potentially getting retail tenders, who are the ones that are able to get their brand out, where people eventually are going to go to, there's going to be purchasing power and pricing in a Tweed brand or in a, pick your MedRelief or whatever the brand is, as opposed to, where the actual plant is grown. And I think that the sector overall is going to get increasingly commoditized when it comes to what is the raw material of cannabis, and you have to look at the cannabis industry like you would any other CPG company, and I think alcohol is probably a good parallel to see where it eventually will go. But again, you have to be very discerning, and just to hear some of your introductory remarks there with respect to whether there's self-dealings or if there's some nervousness in the sector just because it's so nascent. I think that the cannabis sector brings such an opportunity, particularly for Canada as a whole, given the fact that we're really the only major nation that has cannabis legalized from a federal level, both medical and recreational. There's going to be a lot of people coming into the well to try and capitalize from that, and I think having a discerning eye is going to be critical, and no matter how you look at it.
Eric, you're the lawyer in the room, so you should be able to give us some good counsel on this. I think it's a year ago, there was a lot of murmurings about this kind of thing and real concerns with governance, and now we're actually seeing it, coming in, the kimono is opening.
Yeah, I think one of the things that people always ask is what's the most surprising thing in the industry, and it is really the speed at which it's become legitimate and sophisticated. On the same note, companies are going to experience growing pains, and you're seeing a lot of that right now, I think, in some of these corporate governance issues, very much so far, and I think, we'll get Robin's insight in a second for, I think, an example of a company, frankly, that's doing it right. But beyond that, the gloves, I don't think, have fully come off yet between all the market participants. There's still a lot of this rising tide lifts all boats. But when you see things like the couple of examples that you gave, it does kind of bring back a little scary thoughts, whether it's going back to junior mining. There are governance issues, and it's really important that these companies work with sophisticated advisors. And this is not just me shilling for myself, but it's true because they're experiencing rapid growth. Like, these are companies that are now worth billions of dollars, but for all intents and purposes, they're still startups, and they've gone public, and they have massive valuations, and there's lots of potential litigation risk. So it's important that they have proper protocols in place. This all comes down to process, right? If you can show that a board has done a proper corporate governance process, they put in proper checks and balances and parameters, then that's all people can reasonably expect from you.
But is it a question of these companies, they don't know what they don't know, or are you seeing a little bit of both, of they do know what they know?
Look, I think there's an example of some people, frankly, making too much money too fast, and at the end of the day, greed may have a factor in this, but really, this just always comes down, we advise clients on this all the time, this comes down to proper protocol, proper governance. There's a framework, and again, as long as you're following that framework, you're going to be able to build yourself a shield and also do right by your investors.
I think on that note, exactly to your point, when we're talking about advisors and really relying on external counsel, whether that's legal counsel or financial counsel or regulatory counsel, a lot of us are doing things for the first time ever. And we really do need to take into account what that looks like and rely on external parties to provide risk assessments, right? We're all trying to forge the path and be the first one to take a step. And I think in particular, my company moving into the US shows signs of what that looks like. So it's just important to have the structure in place, whether that's using your board of advisors, as well as proper, protocols in terms of compensation committees and all the mechanisms that we can do to do our double checks and forge forward quickly.
So Brian, over to you. I mean, you see a lot of these companies from the inside because you work on the compliance side of the business. What are you seeing right now?
You started with the hardest possible question. None of us are commenting specifically.
Not on specifics.
No.
Half of them are conflicted out if I were to ask a specific company question. But tell me seriously. I mean, what are some of the patterns that you're seeing in terms of the pitfalls?
I think it's a little bit like a 14-year-old in Alberta who finally gets his driver's license, right? And so he's excited to go here, here, and here, but he probably really hasn't thought through what driving with a toke means, or going after hours when it's dark, or obeying the speed limit. I think the industry has just got its driver's license, but we haven't gotten into too many accidents yet. And I think the accidents will probably happen more. I think governance is a very overlooked area of risk. The industry is always talking about opportunities in the space, right? But the opportunities are everywhere, and they're fantastic. But the risks are equally important. There are two key factors in driving earnings. You have revenue and you have expenses. I'm sure my finance team will tell me I got that wrong, but both are equally important, and I think the risks are highly underrated in the industry.
Okay, and specific risks that you see?
I think it's a race to the finish line, but no one knows what the finish line is. And so initially it was a race to get licensed, and then it was a race to get supply contracts, and now it's a race for international, or a race for retail. But what's the end game beyond this? It reminds me when my firstborn son was born. All I could think about was when he was born. It was great, but then that first night at the hospital where I had to stay overnight, I didn't know I had to stay awake for 48 hours straight. Mm-hmm. And I think the industry is kind of at that spot today where we're very tired and we kind of miss not having kids. Sorry, I love my kids.
We all love our kids. One thing that we've chatted about, which I think is really interesting, is when we think about the risk, and we think about how a company is reporting its financials. But what about some of the stuff on the inside of these companies that people don't necessarily see, but are really crucial to performing well? I'm thinking of your management, and I'm thinking about recruiting and talent.
I think the question, and see, a lot of the executive talent that we see in the industry today is grown with the industry. But I think 2018 and 2019 especially is the year when we will borrow good talent from industries that have a good track record, who understand what it means to have transparency between governance and the senior management team. There are many examples that we have seen where it shows a lot of immaturity in how the board interacts with the senior team and how the senior team interacts with its frontline people. I don't think they've learned the painful lessons yet, but did that answer your question? No.
Yeah. So what I find interesting about Navaste and Aphria, perhaps not surprising, but both of those situations were unveiled by short sellers. I've actually seen there's been a rise in activism talk and panels where people are now predicting that cannabis is going to be the next great target for shareholder activism. Matt, any thoughts on that?
Yeah, I would expect certainly that issue to increase. I think that there's probably some justified criticisms out there in the market, depending on the companies and depending on how the market plays out. Before the cannabis sector sort of came to Canaccord, I was involved in the healthcare, and there's no shortage of short reports on Valiant and Concordia and some of those names. And I'm a little jaded from it just because it can take up my entire day out of nowhere when they come out, with some of the findings. But I think you have to also be critical with what's in a short report, because a lot of the times I find they'll say, well, here's A, which is true, and here's B, which is true, therefore C, and it has nothing to do with anything. But in the case of what's been alleged with some of the licensed producers out there that's public, there might be some legitimate governance issues that shouldn't be ignored, and that's going to play out. So I think it's going to be an increasing theme, because at the end of the day, there's X amount of cannabis companies when you line them up, from the TSX to the Venture to the CSE. If you include every single company that has cannabis in its description, there's probably 100 or 200 of them. Canada, we have 3 or 4 telecom companies, 4 or 5, 6 banks. We don't need 100 cannabis companies. So I think there are going to be winners in this space and losers in this space. And I think short sellers report could down the road actually put some spotlights on those.
Eric.
Yeah, no, we've for sure seen an increase in this. And again, I think it's almost like the situation is perfectly ripe for it. When you look at, there's increasing interest in this from the U.S. A lot of this stuff starts in the United States, and this was a sector that they weren't really watching the Canadian cannabis sector until kind of early 2018, and it's gotten, people have just made too much money too fast, and it's drawn a lot of attention from folks in the U.S. So between that, obviously anybody who's following the markets, there's just insane stock volatility, and maybe you can explain it, I can't. And then obviously when you have governance issues, when you have companies whose results, financial results, may not necessarily hit expectation, or they're frankly not just making that much money to justify huge valuations, that's going to draw attention from activists. So we're absolutely seeing that, along with obviously consolidation too, right? Which is the next big wave. So either through shareholder activism or through kind of pure consolidation, it's going to be something that we're all going to be talking a lot about in 2019.
So given that, I'm just curious, just to go back to you quickly, Matt, would you then say, between the concerns around activism, increasing targets by short sellers, consolidation, that investors need to be very wary, I would think?
Well, I think that the sector overall is a very, very legitimate sector. I think it gets actually a bit of a bad rap when people kind of, they look at any, given, week when these stocks are ripping on the upside. They look at it and there's a bit of a chuckling with it sometimes, because a lot of the times it isn't fundamentals that's moving the space. So I think there's a tremendous amount of legitimacy in terms of what this opportunity is, but you just have to be very discerning with who the operators are. There's a lot of promotes out there. There's a lot of companies that have seen what happened in 2015, 16, 17, and some of the money that's been made in the sector on a personal level with some of the management teams, and just the overall market capitalization increases, and that's just going to attract more and more potential stories to come in that may or may not be as legitimate as others. But I think if you, like I said, are discerning with the company, if you're looking at the overall fundamentals, I think there's an element of this that most of the companies have to backfill these valuations. But in my mind, if the sector continues to evolve the way that it is, and Canada stays as a leader in the market, there's no doubt in my mind that you can't have a legitimate, based on fundamental normalized multiples, you can't have a $50 billion or $100 billion company. I think that's very possible in this sector. But the way we get there isn't just a normal staircase. It's a whipsaw in getting there.
And what does, and I'd like to ask this to everybody on the panel, but what does, one of the biggest catalysts is U.S. legalization. What does that mean for these Canadian companies? I'm curious. The CEO of Canaccord Genuity has said that he sees some of these companies having real challenges being able to compete in the U.S.
Well, sure. I mean, the U.S. market isn't just sitting there right now waiting for Canada to get involved. Right now, there's something, there's this multi-state operator, MSO is probably a term that's becoming more and more known out there. And there's probably less than a dozen, let's call it a dozen companies out there that have, exposure to 10, 12 states, are probably going to have top-line revenues and profitability that reaches, pick your benchmark, but $500 million to $1 billion. That'll happen before any Canadian producer gets it. So these companies are not standing pat. I do think, though, with the Canadian licensed producers operating at a federally legalized environment for longer, and when now you have Canopy with 5, potentially $10 billion on its balance sheet, you have Kronos that has $2.5+ billion on its balance sheet. They can do a lot of damage, in terms of a good term, a lot of damage in the U.S. market with that on their balance sheet. So it's just a question of whether a States Act goes through or whether there's more de-risking in the market. Now that they're all listed on major U.S. exchanges like the NYSE and NASDAQ, I don't know if they're going to be necessarily allowed to get into those operations, and maybe the lawyers on the stage would have a better indication of that. But
yeah, sure. And again, I'd love to get Robin's thoughts on this, because she's a perfect example of, I think, again, a company that's looking at this the right way, like the bottom line. And I know we've talked a little bit about this separately, Andrea, but the risk, I think, right now is that Canada is just too busy patting itself on the back. Like, we're in a great spot, and there's a huge opportunity as a country before us, but we really have to be able to take advantage of that. And that opportunity, from my view, for what it's worth, is not in cultivation. It doesn't make sense. If anybody's flown to Colombia, for example, the weather's the same there every day. All you see is green. It doesn't necessarily make a lot of sense to have these indoor 800,000 square feet facilities in the middle of nowhere. So how can Canada leverage the opportunity? It's trying to find assets and make these global companies. It's trying to export innovation. We have terrific companies that are in other verticals within the sector, payment companies, data companies, tech companies in Canada. It's that where we can be leaders in this industry, I think, more than just pure cultivation. Let other people and other places do that, can do it better. We have to really be able to sell what Canada does best, I think.
I want to get back to you on that, but Robin, I really want to hear from you, because TerrAscend's been very unique in being one of the first out to say we will be investing in the United States.
So we strategically stayed on the CSE for that particular reason. And what we did as a result of that, it's obviously the beginning of what the whole U.S. story is going to look like. But we did recently receive one of the limited licenses in the state of New Jersey. So they have 12 licenses in total. That is a vertically integrated license, as well as we did just close the acquisition of a company called Arise Bioscience. What they are is they're a hemp distribution company, which touches 10,000 retail points. So definitely we look at the U.S. as a huge market. We definitely also understand, although there is a little bit of the Wild West out there, there's a lot of IP that can come across to Canada that we can commercialize, stabilize, professionalize, and scale out across both Canada and the U.S. as well as international. So I think when we're talking about cross-border trade, cannabis is one particular item within the cannabis industry that we can move across borders, and it's really important to look at the R&D and the market size of what the U.S. has. I mean, if you have asked me when I think the U.S. is going to flip, I think if anyone had that, piece or lottery winner numbers, you guys would all hopefully be
Don't say lottery
investing in
winners.
us. Yeah, it's true. Sore subject.
Bad term.
And we'll speak about that.
We're going to talk about that in a moment.
But, I don't think anyone has clarity as to exactly when it's flipped. I think we've seen a lot of movement both from the Farm Bill as well as the States Act. So seeing those moving pieces come together and understanding the potential, it's really why we're driving forward. And we'll participate in vertically integrated licenses where it makes sense. And in certain states where vertical integration isn't required, our focus has never been to be mass cultivators. So we'll be strategic about our capital investments in particular states.
So I want to, since you brought up the lottery word, let's talk a little bit about the lottery. And I hate to put you on the spot, but I mean, a show of hands, who actually thinks that this current process is in Ontario of 25 lottery winners is a good idea?
He does.
Oh, I recognize you. You were on CBC. Yeah. Over here, he's over there.
Yeah.
But I mean, it's an interesting process, and I'm curious to get your thoughts. Maybe Brian, we'll start with you in terms of how you think this might play out. I mean, you're working with some of these folks, if I'm not mistaken.
We are.
Our sense is, from what we can tell, that a lot of these people don't actually have retail background, and retail's a really hard space to do well in. So what is it that you're seeing, and what is it that you're counseling the winners?
I think it's a complicated venture for anyone who's coming into a new industry and a new retail environment. Absolutely, the retail process, it is what it is. I think all of us
You'll keep your hands behind your back on that one.
Yeah,
Okay.
we're all watching this experiment and applauding the few successful people that made it through. The challenge that we see, though, of course, is the lack of experience and training and personnel. So. This is not just selling M&Ms at a convenience store, right? The government took a health public policy approach to cannabis, and the retailers are the primary guardians of protecting the health and safety of Canadians. The lack of training, the lack of qualified personnel, these are amazing challenges for retailers. There is already a lack of qualified people in the cannabis sector. I think it comes down to the people assets and where are they going to get these people from?
Have you been any thoughts on where could they be borrowing? Where does it make sense?
I think by necessity they'll go to the same watering hole that any retail environment would go, newspaper ads for hired hands. But I think you'll see a lot of turnover in the sector on the retail side, a lot of turnover, and I think a lot of this comes down to the culture. I mean, we have an old culture in cannabis that is wonderful. We've all grown up with the Cheech and Chongs, right? Mm-hmm. But in terms of actually being a world-class retailer, what does that culture look like, right? And what kinds of people? How do you train these people on best practices in cannabis?
Okay, Robin, you think it's a good idea?
I do, not by choice, by necessity. And I'll start with that lovely statement. And the reason I say that is let's look at other provinces. Let's look at Quebec and how they had to shut down to a number of days a week because they didn't have enough supply and couldn't withstand employing the people that they just hired. PEI, recent closure of one of their location. We can look at Alberta, where it actually stopped it in the middle of the licensing segment. So you have individuals that have gone down, have started to build out stores, and then they said, stop it, because we don't have enough supply. So that's the only reason why I say that it's a necessity. And if we look at the Health Canada data that was published about 7 days ago, you can see that we have 19,000 kilos sitting in finished inventory and 109,000 kilos sitting as unpackaged, unfinished goods. So when we talk about the issues and getting product to market, I think we should look beyond just a supply question and look at a compliance route to market. And I think that's what a lot of LPs are struggling with because it's new. And I think the perfect example for us is excise tax, right? We've kind of gone down the route where we were going to participate manually in the packaging of materials for the first 4 months because we needed to learn what machinery we needed, as opposed to putting capital behind guessing determining what types of machine were going to be needed. So when we talk about our capacity, I think we are going to see that uptick. We're in the process of fully automation right now, so our capacity is going to triple at this point in time, and I think that's when you'll start to see some of the unfinished product actually move up and get delivered to the provinces.
Eric, I'd like your thoughts. I mean, there was a great story in the Financial Post not that long ago, quoting a real estate investor who said he'd been inundated with calls from people representing lottery winners, trying to find some kind of revenue sharing agreement to get around all the rules around, well, who could invest, and he ended up stepping back because he thought it was, paying millions for revenue sharing agreements would not actually end up being economical or make any business sense. So are we going to be seeing some unintended consequences coming out of this process?
Yeah, like it's been, I don't think I've slept in 3 weeks. Like it's been an absolute frenzy. And I actually agree a lot with what Rob said. Like I'd put my hand half up. The logic behind it is good. I think there are supply issues that the government needs to step in and needed to step in and manage. That being said, I'm not 100% sure that the execution has been entirely in the public interest. It's been tough getting information. The bottom line is the barriers to enter that lottery were access to internet and $75. Yeah. That was it. And what you ended up with all due respect to any lottery winners who are here today, there wasn't a lot of experience there. And I've been working in this industry for 3-4 years. Smart, I think. I had no ability to open up my own retail store in 2.5 months. There's a ton of work that has to be involved there, and none of these winners, frankly, are equipped to do that without helping, without needing the help, someone who can effectively almost provide a turnkey operation, right? If you're a real estate agent who won the lottery or a gardener who won the lottery, that's great. You have a huge opportunity before you, but you have to be able to execute it, and more importantly, you have to be able to execute it in a way that the government's going to let you do it. And it's been a little bit tricky because I don't know how good of a job, frankly, they've done engaging with folks. There's a lot of rumblings coming out. There may have been some nasty letters sent over the last little while to certain winners, who knows? And it's going to be a struggle that everybody tries to figure out. The end goal always has to be, we need to get good quality stores with supply open on April 1st. How you get there, I don't think anybody knows yet, frankly.
Okay. And just a reminder, if anybody has any questions, please feel free to fill out your cards, and we'll try to get to as many as we can. Matt, I'm just curious if you are thinking about this from a capital markets perspective and what potential impact this could have.
Yeah, I think it's a very important indicator. So whether it's good or bad, the process, I think that's just relative to your time frame. So from when the Ford government came in, can you really expect them, given all the logistical considerations that are involved, to really get more than 25 stores open in 3 to 6 months? I don't think that's unreasonable. If you go back to when we got the first indication that there was going to be a legalized cannabis market, fall of 2015, at the latest, I think it's quite frankly a joke that there's really only this much potential infrastructure that's ready, waiting in the wings at this point. So from an equity analyst standpoint, or from why I think it's an important thing to track, is it really is an indicator of how quickly or slowly this market's going to evolve. Because your average user, when you go to a MedMen store in California, or if you go around the U.S., it's about 52, 53 years old. And when you look at what is in the illicit markets right now, it's people that are basically smoking dried flower. I know you can get illegal concentrates and other things, but the incremental users are not going to come into this space until it looks more like consumer packaged goods, until they can buy it in a store that's in a normal strip mall or wherever, where they do other shopping, whether they can buy it online where it's not a $5 surcharge and you don't have to wait 17 days or whatever it is in order to get your product. You have to be able to provide convenience and availability and access to product in order to get this market to organically move from what is historically illicit to something now that is legal. So until you have enough storefronts, there must be, I think it's like 800 or 900 LCBOs in Ontario. Ontario is going to be probably about 40% of the cannabis market, based on population. You're going to need, assuming that brick and mortar becomes a part of this and it doesn't kind of get eroded by delivery, you're going to need several hundred, maybe 300-400 dispensaries in Ontario in order to get this market fully transitioned over. So my overall takeaway, the long and short of it is that you shouldn't expect a fully ramped up, maturing, revenue flowing sector in Ontario for a few years now.
Few years, yeah. Like 2022?
Well, it's going to happen over time, but my estimates are that the Canadian market at retail is probably around $10 billion. I don't think you should expect $10 billion in sales anytime soon. Maybe we'll hit $2 or $3 billion in the next few years, but it's going to take some time.
Robin, you want to add something?
I was just going to say, to kind of add on to that point, I do think product formats is extremely important as well. If we look at both the buying behavior of the black market currently as well as some of the mature markets in the States, smoking does not have to equal cannabis. And cannabis can go way beyond that. And I think that's when we start to talk to that particular target market that may be around 50 to 65. A lot of individuals don't like the smell because of the stigma in which they were grown up getting faced. And, I think the consumption method in terms of finding the healthiest route and bioavailability towards that product is going to be extremely important. So I do think product formats to hit some of those revenue targets are going to be important, as it just speaks to a larger base as opposed to just the smokers within this industry.
Well, that's a good transition, talking about the formats. So we have a question from the audience around edibles. We know that right now we're in the middle of the consultation phase. I think it ends on February 20th. This question is, will edibles really change the market and bring more people to market? I mean, there's a lot actually in the edibles to unpack, but I don't know who would like to go first on that one.
I can speak to that. So I think the Edibles Act included way beyond just edibles, and we're looking at formats and derivatives such as shatter and concentrates, and I think that's when the dose question gets disconnected from edibles. We see the dose requirements surrounding edibles and that they're very restrained, and I think it's important based on how you're digesting the product. So it going through the liver, it potentially having a higher potency effect or in fact an impairment. I do think it's important to separate the two, allow concentrates so individuals don't have to consume more mass to get the same intended effect. But I do think the edible route in capping what that percentage look like is important at the milligram level.
Okay. Do you think it'll, though, change the market in terms of, to your point, people not liking to smoke, that people will just go right to gummies and a lot of the other stuff is going to fall by the wayside?
Yeah, and I think we're seeing that in the U.S. right now as well. So if you look at more mature markets in, say, California, edibles are owning between 50 to 20%. Less mature markets like Nevada, it's actually higher. So it's between 30 and 45%, which is quite interesting. So I think it just speaks to the amount of product formats that will be available to discuss whether that market share will be as high as we expect it to be.
Eric, any thoughts, or Matt, on edibles?
Well, yeah, I think I think Robin said it best. It's something that is going to be needed in addition to retail to get this market up and running. It typically in most legal U.S. markets is well over 50, if not 60% of the products that are sold are not dry flower. But the term edible I think just gets used a bit generically. It's really I've been to I was in Arizona last week, and that's a medical-only market, and they have dusted popcorn and brownies and even dog biscuits. I don't know if the dog needs his own prescription or how that works, but you can get really any breadth of products down there. And the more that you make it, in my view, look consumer packaged in a highly regulated way, that is something that is ingestible or otherwise. I think that having product selection is going to facilitate more participation in the industry as a whole.
Okay. Now, from your perspective, Brian, what do companies actually need to do to be preparing for edibles?
$1 million question.
$1 million question.
They need to pay you for this, but you can give us a little bit.
Sure. Yeah. See me after. I think the big challenge is going from a cultivation industry to a manufacturing industry. That's a big learning curve for a lot of companies. They don't understand the equipment. There are a limited number of people who have worked in CPG or pharma who can be hired. We can't just hire an indefinite number of qualified people from pharmaceutical. Well, they are laying a lot of people off, but the lack of expertise is certainly going to be a surprise. And today, as an example, we place master head growers for companies. We're running out of people. We have to look in the United States now, right? What's going to happen to the CPG and pharmaceutical sectors too? Are we going to bleed them of staff? We can pay more. Right? And I think the coming of age story, it's a wonderful story for the cannabis sector, is going from grower to manufacturer of finished products. I don't think it's going to be easy, but I think they'll figure it out with some good help, some hired help.
Okay. Eric, what are you seeing on that front?
Yeah, no, I agree entirely. There are growing pains, and there's going to be lots of market participants, frankly, that you would have never associated with this industry years ago, now trying to get in. But again, there's going to be protocol, there's regulations in terms of needing totally separate locations, licensing. You're going to see a lot of team-ups, I think, with licensed producers who can help give the growing pains. And the biggest struggle, I think, and I think Robin alluded to this earlier also, is just becoming a more mature company that's now basically a retail packaged a consumer product company, right? The packaging of this has been hugely challenging for a lot of LPs in the sense that they used to just have these big cultivation sites, but now they actually have to get it, from there properly weighed with stamps on it in proper child-proof packaging. Fundamentally the business is shifting, and that's only going to continue to be the case with edibles, and it's going to be a huge part of the market. But even just tying back to the last question on retail, it's interesting because we've seen this crazy frenzy over these 25 stores in Ontario, and when you step back and look at it, what is it? It's a little bit of maybe a 6 to 9 month head start. It's single store economics, and those stores won't even be able to sell whatever it is, 70% of the product that ultimately they're going to sell, whether it's edibles or concentrates. So again, it's just
interesting point.
It's all insanity right now. It really is.
Oh, well. Okay. All right. I have a few other questions. Obviously, some retail shareholders in the space. Oh, okay. So what are the, I think this is for Matt, what are the catalysts required to attract meaningful institutional ownership of the publicly traded stocks in the cannabis space? And does this impact valuation multiples in a material way?
Yeah, so it does, of course. I think some of the catalysts we're looking at is, as much as I think the worst thing that could happen for the Canadian producers is if all of a sudden the federal restriction, the Schedule 1, I should say, in the U.S. went away. If that went away overnight, I mean, you might have other parallel industries come into the space that don't necessarily have to invest through a multi-state operator in the U.S. or through a licensed producer in Canada. So I think one is just going to be overall comfort as this market rolls out, see that the world doesn't end, that the kids don't go insane, as long as that it's regulated in a responsible way, which I think as Canadians it's probably more conservative than what we've seen in many of the U.S. states. But I think some of the catalysts out south of the border are going to be potentially the States Act passing, where that's going to help true up a little bit, or at least give a little more leniency in some of the banking regulations. And if you see exchanges like the NYSE or the NASDAQ start allowing certain cannabis players to be listed, I think you're going to see a flood of capital enter the space. And that's something that's not really a new trend in the cannabis sector, because when you look at all the highs and lows of what's happened over the last couple of years, a lot of it isn't actually changes in fundamentals. To agree there is value accretion as companies execute and get purchase orders and get international assets. That does provide value to shareholders as they get more and more assets. But really what it is a lot of new fund flows coming into the space. So there's been a lot of retail money flooding into the space by what started with, I think, Cronos, but now you have Canopy and Aphria and Aurora and a lot of other companies that are listed in the U.S. You have to think about your average retail investor that doesn't live in Canada. I mean, a lot of them might not really know what the TSX is or might not want to open an account in Canadian dollars, and just providing access to shareholders, to potential shareholders, to invest in U.S. currency or invest on a major U.S. exchange is really going to bring more money into the space. So from the institutional side of things, I think a lot of things that are keeping institutions out aren't anything to do with laws or regulations, and maybe you guys could be more insightful in that regard. There's a lot of just internal rules that they have, and they don't want to be able to be stepping on or be seen stepping on the toes of some of their U.S. counterparts or some of their U.S. subsidiaries. So I think it'll happen slowly, but in terms of catalysts, I think States Act is a big one, and I think overall having this market roll out and get a couple of years of regulated sales under our belt.
Because I could imagine with what we've seen happening with Navastay and Aphria that's got to
No, that doesn't help at all.
Spook the institutional.
No, I mean, I think this is a sector that I think, as I mentioned, is a legitimate sector, but it has to prove that, and that's going to take time to do it. And having stories like Namaste or Aphria, whether they're, I'm not commenting one way or another, but whether there's any teeth to it, but it's certainly not good to have that in the headlines, and it takes a step back for the industry as a whole. I'm sure even if pick another, Canopy, for example, even though they're not named in any of those issues, I'm sure they hate that because all these names are trading kind of in the same direction, and if you move the sentiment in the wrong direction, you're affected by it no matter what producer you are.
Mm-hmm. This is a bit of a very specific technical question. With cannabis being a Schedule I drug in the U.S., what are your thoughts on Canadian banks requiring cannabis clients to provide waterfall reps and warranties to support U.S. banking licenses by Canadian banks? Is that anything that any of you can speak to?
I don't have to answer this one.
No, you don't.
Okay.
That's a very specific question.
Very specific question.
It's probably better to chat offline. Just go through it one more time.
Okay.
To take a stab at it.
With cannabis being a Schedule I drug in the U.S., what are your thoughts on Canadian banks requiring cannabis clients to provide waterfall reps and warranties to support U.S. banking licenses by Canadian banks?
Yeah, that's probably we can chat about that. Whoever asked that question.
Whoever asked the question.
I am happy to chat, but it is a huge challenge right now, and again, the banks are struggling. We've worked with a number of them, basically trying to ring fence their operations, and again, shops like Canaccord have done a terrific job, but everybody's trying to access this. Opening bank accounts for cannabis companies is painful right now, and especially you're seeing more and more U.S. companies trying to come to Canada, and when they create their Canadian subsidiaries or their Canadian entities, they need to open up bank accounts, and it's proven to be very challenging. There are a couple of little tricks, and we've had some success with banks in trying to get them comfortable, but banking continues to be a huge challenge in the industry in general.
So kind of like a big picture question as we get to the end of the panel is, we've spent, I think, the last little while celebrating what Canada has achieved in terms of being the first major economy to legalize cannabis, and I don't think that's something that we should understate at all. It's a big achievement and very exciting. We're watching the building of an industry in real time, and that's very exciting, and we've all seen the benefits of that from our various vantage points, and has created a lot of economic opportunity across the country. So the question as we look forward into 2019 and 2020 and beyond is, what do we need to do either as a country or as a company or what have you to preserve or at least ensure that we remain a relevant and important player in that market, and a lot of the IP that we've put into building up the industry where it is today, we are going to continue to reap those benefits on a go-forward basis. Brian, let me start with you.
Yeah, wow. The crystal ball is difficult. I love Canada. I'm a Canadian. I think we have had a runway to prove ourselves. I don't know if we've done that responsibly. I don't think we've gone very far earning the trust of the consumer. I think we have a long ways to go. Is that good? I think that hurts us. They do. If the U.S. legalized tomorrow, would anyone remember that Canada did it first? I don't think so. But I do think we have the advantage in being a highly regulated market first. California is a mess, right? Yeah, they did it first quasi-legally many years ago, but they are a mess. The facilities are usually dirty. They don't have good procedures. The staff are poorly trained. In Canada, we have to go through these growing pains of being a highly regulated market. And I think, it's bragging rights, but we will learn the hard way of how to be profitable, hopefully, in a highly regulated market. I think we can leverage that into edibles and concentrates and figure out how to make all these products legally and safely for people and earn their trust. Mm-hmm. I think that's our only advantage. I honestly don't think Canada can survive beyond 5 to 10 years if you're laughing at me.
No. She's nodding over there. I just find it interesting because...
Sorry, I know you're Canadian.
No, but it's just interesting because we Canadians are very good at regulating. It seems to be the one thing we do really well. I don't know how that necessarily translates into economic benefit or global competitiveness. So, Robin, over to you on that.
I've spent a lot of time reading regulations. It's one of my biggest roles, I guess, in the company, both U.S. regulations as well as Canadian. And I could not be more thankful for how the Canadian regulations are written. I know that might seem crazy, but to be honest, the clarity in the Canadian regulations compared to some of the ambiguity surrounding the U.S. regulations is such a tool for us to use and to take advantage of. And I do think our regulations are going to be the one that protect us, especially as we look at international opportunities. EU GMP compliance is a huge differentiator in terms of Canadian LPs, which speaks to the entire potential of the world. So when we're talking about crazy valuations, U.S. is some of that market in terms of its potential, but I think we're overshadowing some international jurisdictions which could really drive some of these licensed producers, and that's through regulations. You cannot send to the EU unless you're EU GMP compliant, and that's a really important tool that I think Canadian LPs should leverage and bring that to the U.S. as well. We're currently doing that right now where regulations might not be in place, but that doesn't mean it's a good practice, right? So taking that kind of ethical stance and going above what that looks like and creating the new benchmark, everything from pricing scales to, compliant packaging, it's something we feel as our duty to bring across to the U.S., and I do think that will raise the benchmark and protect Canadians in their ability to take over the world.
And are you at all concerned though that like we've heard a lot? I mean, this is not news, but those concerns around these very heavy restrictions on marketing and branding, which you don't necessarily have in the U.S. Do you not see that as potentially a bit of an anchor or weight on your ability to
brand, I think for sure, and to gain that kind of communication direct from LP to the consumer, there's definitely a gap there when we're talking about the regulations here in Canada. But I think through retail, through other initiatives where you do have that point of sale connection with the end user, I think that's something that we can overcome. And I do think it's really important that we have one chance with these regulations. So whether it's not being appealing to children, whether it's the low dose, we're fine with taking it slow and growing with it. And I think, although it might be a smaller potential, we have the potential and can justify the fact why regulations need to be adjusted. And I think it's extremely important to take on that.
Okay, Eric, go ahead.
But I think there's two questions here, right? Good. You're talking about does Canada have an economical or business advantage in the global scene? I think the questions are twofold. One is, can we actually win in our own market, in the Canadian market? Because we have many examples of American and global firms kicking our butts in Canada, right? The other is, can we win in the international market? And I think we will be winners in the Canadian market. I do. I think we've got great stories to tell. International, though, I think it's a little different, harder. How do you pick a winner? I mean, the horses are fawns at this point. I mean, it's impossible. I'm full of metaphors.
Yeah, I like it. Eric, your thoughts of where you see opportunity for us, where you see the risk?
Yeah, I think it's twofold. I think the first one is just there will be global winners. This is a global sector. We're still in the first inning of the global cannabis industry, and there's obviously a handful of Canadian companies that are well poised to be those global winners. So that's for sure one way to do it. But the other way is kind of going back to what I think I was alluding to a little bit earlier, trying to find what we can export here. And I agree with Robin. Our regulations are terrific. They're very thoughtful. They're very robust. Things like that sort of knowledge we can take overseas and take advantage of that, be thought leaders. I see representatives out in the audience there's a couple of terrific tech companies, payment companies, seed-to-sale software companies. These are cutting-edge companies that are focusing on all the other verticals other than cultivation, turning those into global powerhouses. Again, the future for Canada is not in cultivation. It just doesn't make economic sense for us. So it's finding what we're good at, which is innovation, coming up with creative companies, ideas that are cutting edge, and taking them around the world and being leaders in the global industry in that way through our innovation.
And Matt, the last word goes to you. I mean, you spend a lot of time in the States. You've seen probably the broadest cross-section of companies of anyone here.
Yeah, well, I think 2019 and sort of beyond, particularly for the Canadian licensed producers as a starting point, is going to be a year and for years to come of hopefully execution and moving away from just press releasing. So since I've started in the space, there's probably been $7 or $8 billion raised. That doesn't include what Constellation and Altria and some of these investments have put in. And with those raises, there's been a lot of concurrent news releases over the last couple of years of we're going to have the biggest facility. Okay, well, has that been finished yet? Are you doing it efficiently? Do you have purchase orders from the government? And then you hear a lot about EU GMP certification, which is important. The second step to that is, do you eventually find a partner internationally that you have supply agreements with, and does it come through your top line and your revenue? In terms of boots on the ground international operations, which there's, every large cap licensed producer now has 12, 13, 14 countries they're in. Well, what are you actually doing in these countries other than just releasing that you have exposure there? Do you win a domestic cultivation license in Germany, which has been delayed for a while? Are you actually able to export to Mexico or Argentina or Brazil or some of these LATAM markets that are getting important? So the capital's been raised, the headlines have sort of been out there, and I think 2019 is actually going to be a huge story, hopefully, if it all works out well for the industry as a whole, of actually executing on a lot of these endeavors. And it's really no different than the U.S., but of course the U.S. side of things is more state-by-state considerations. Are you able to cobble together a very robust portfolio of exposure in the U.S. where potentially you have access to 100 million Americans or 200 million, and execution for them is going to be important just as much.
Okay, well, with that, we're going to draw our panel to a close. And yes, okay.
So panelists, on behalf of the Canadian Club of Toronto, I would like to thank you for your expertise that you shared with us this afternoon. Found it very, very interesting. With the rapid changes occurring in this new market, it was helpful to hear your perspectives on what the cannabis marketplace will look like moving forward. And as you pointed out, there's a great deal of interest in how Canada is addressing the many issues related to cannabis legalization. Slipping on that one. Investors, retailers, entrepreneurs, and consumers are watching these developments closely. So Matt, Eric, Robin, and Brian, there is no doubt that the cannabis market will benefit from your experience and expertise in general. And as the sector continues to mature, it would be the club's pleasure to have you back at our podium. And to our moderator, Andrea, this is the second year that you've moderated our conversation on cannabis, and we appreciate your engaging approach and your mastery of leading good conversation. Before we conclude, here are some highlights of upcoming club events. On Friday, February 8th, Murad Al-Khatib, President and CEO of AGT Foods and Ingredients, will be here to speak about the global challenge to feed the world. And on Wednesday, February 20th, the club will host the President and CEO of both RBC and Enbridge. David McKay of RBC and Al Monaco of Enbridge will address Canada's energy future, and we hope that you can attend. I'd like once again to thank today's event partner, the Growth Op, and our sponsors, Cannabis Compliance Inc. and National. We'd also like to thank mediaevents.ca, Canada's online event space, and VVC for live streaming today's event. Thank you very much for joining us here today, and we look forward to seeing you again soon. Thank you.